If your EAs look amazing in backtests and then bleed out live, this channel is for you. Hi, I'm Shane, and this is my Beyond Backtests AI avatar. You'll notice I'm AI generated. That's deliberate. I use this avatar so I can focus on sharing what I've learned about algo trading without worrying about cameras and re-recording the same explanations. I spent years as a manual trader. I paid for courses, followed experts, copied strategies, and still couldn't crack it. The big lesson? You're trying to trade someone else's personality. Their strategy fits their emotions and discipline. It doesn't automatically fit yours. That's why I moved into algo trading. EAs don't care how you feel. They just follow rules. But let's kill one common myth straight away. If I just get one really good EA, I'll be profitable. That's not how this works. Tools like EA Studio don't find the one. They generate hundreds or thousands of candidates. Your edge is the workflow that rejects junk early, stress tests the survivors, promotes only the strongest into a portfolio. Even a robust EA that passes your tests is still dependent on market regime, will have drawdowns and flat periods, and can be hit by changes in volatility, spread, swap, and broker conditions. If you lean on just one EA, you're fragile. So the real goal isn't find a winner. It's build a pool of tested EAs and then choose a portfolio that works together. Think of it like this. EA Studio is the engine that generates strategies. Acceptance criteria, WFO, normalization, and Monte Carlo are the machinery that filters and stress tests them. Live demo and portfolio selection are where you only keep what works in the real world and assemble a team, not a solo hero. In this video, I'll show you the 5 checkpoints every EA has to survive before it gets anywhere near real size. Step 1 is acceptance criteria. Most people skip this. They just generate strategies and fall in love with nice equity curves. I use EA Studio to generate, but I don't let anything through unless it meets minimum stats on the full backtest, the in sample, and the out of sample. Things like profit factor above a minimum, R squared of the equity curve, return versus drawdown, a minimum number of trades. The goal is simple. Reject obvious junk as early as possible. Don't waste time emotionally bonding with a system that was never statistically serious. If an EA passes that first gate, it hits Walk-Forward Optimisation, or WFO. Here we simulate something closer to reality. Optimize on one chunk of data, trade on a separate chunk, repeat this across the history. I like using a big out-of-sample chunk, around 50%, split into multiple segments. For each segment I ask, is performance still acceptable when the market is new and unseen? If an EA only looks good in optimization and falls apart in most of the WFO segments, it's not robust. It's just memorizing the past. That one goes in the bin. Next is normalization. Even good EAs can come out of optimization with weird parameter choices, fragile stop levels, hyper-precise filters, or unnecessary complexity. Normalization is where you simplify. Remove indicators that don't add much. Tidy up extreme parameter values. Avoid insane over-optimization on tiny details. But the key is timing. I do this after WFO, not before. First, the EA has to prove it can survive out of sample. Only then do I clean it up. Normalizing too early just means polishing something that might never have survived reality anyway. Then we hit Monte Carlo testing. Instead of one clean backtest, we deliberately disturb things. Randomize the order of trades, shake entries and exits a bit, add noise to slippage or spread. You don't just ask, did it pass once? You ask, in how many disturbed scenarios does this EA still look acceptable? I look at the percentage of validated tests and confidence levels on key metrics like max drawdown. If small variations completely destroy performance, the EA is too fragile for live trading. That's another one for the recycle bin. If an EA survives all of that, it still doesn't go straight to a big live account. It goes to live demo or a very small live account on a real broker with real spreads, commission, and swap. I want a reasonable sample of trades, around 30 trades minimum as a floor. I ask, do the stats roughly resemble backtest and Monte Carlo? Is the behavior acceptable under real conditions? Does it still behave when the market is actually moving now, not just in history? Only after passing demo do I think about promoting it to serious size or into a portfolio of EAs. So that's the high-level pipeline every EA has to survive for me. 1. Acceptance criteria, ruthless basic filter. 2. Walk-Forward Optimisation, can it handle unseen data? 3. Normalisation, simplify and remove fragile nonsense. 4. Monte Carlo, stress test under disturbance. And 5. Live demo, prove it in real conditions before real size. Most strategies die somewhere along that path. That's the whole point. You don't want one lucky curve fit EA. You want a workflow that reliably filters out the weak and lets you build a pool of strong candidates for a portfolio. If you like this kind of process-focused approach and you're using or thinking about using EA Studio, I've put this whole workflow into a structured guide called The Algo Trader's Blueprint, Beyond Pretty Backtests. Inside, I go through the exact EA Studio settings I use for acceptance criteria, how I set up WFO with 50% out of sample and segment rules, how I do normalization without over-sanitizing a strategy, my Monte Carlo thresholds and how I read the results, and how I run live demo testing in practice. You'll find the link in the description. In the next videos, I'll break down each stage in more detail, starting with acceptance criteria inside EA Studio and why most people get it wrong. Stick around if you want less hype, fewer dead robots, and a more honest workflow. Reality check before real money. That's it for this one. Stay beyond backtests, and I'll see you in the next video.